The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. S&P is off about 34 points. We're at the lows of the day, maybe a couple of points higher than the S&P cash low. Volume is pretty good, not as good as yesterday, but I suspect that there was a reason for all that volume yesterday, and we're seeing it today with the move back down. 2.9 billion shares on the New York Consolidated tape as we start the show off. We'll track that throughout the show. But the market's really starting to act very much like the energy sector did in August. And that is that a lot of the stocks in August had hit lows and no volume came in. But guess what? There's one more part to that Wyckoff model, and that is that it has to close back into the trading range and continue on light volume. Those stocks did not. They hit the lows. They never really had, they had the light volume. But what they never did was come back into the trading range. They just went lower and lower and lower and lower. And I'm starting to see that in a great deal of stocks. And I don't know if this is some kind of hangover from, what is it, QE15 or Son of Jaws 18 or Rocky 25. It's hard to know with all these sequels because they just never seem to end. But whatever the last QE was that they killed, and of course now the higher interest rates, and it's kind of like just putting off the inevitable. Maybe that's it. Anyway, I am, as I said, pretty much toward the end of the year, I'm a little bit bearish. And by a little bit, I mean I'm a Kodiak bear that ate a polar bear that ate a brown bear that ate a grizzly. I'm a turducken or turbaran. I'm a turbaran of bearishness. And we've seen that. There's something, I don't know exactly what, but it was pretty much around 11 o'clock yesterday. Something broke in the markets, and I'm not exactly sure what it is yet. I have my suspicions that it is something that will come out of Europe, that it is one of those banking issues that's coming to rear its ugly little head, but it's kind of tough to actually see. Now, we're starting to get some bearish articles. Normally, when I see things like Citigroup coming out saying the end is nigh, it's a giant toilet bowl, and we're just riding the torrent of water down the drain. I kind of think that maybe we have and are ready for a bounce, but normally you hear everybody doing that. And in this case, just one lone warning. It was buried actually for about 30 minutes. And then we actually started seeing it on the front page of things like the Drudge Report, other places it started to hit. But it was basically the end is nigh, and get ready for some havoc and other really bad things. And people ask me, what do you mean by that kind of hysteria that you talk of, Mr. Dave El Blanco? I said I had to go to, of course, my favorite guy to explain it, which is Mr. Vinkman. Mr. Vinkman from a few years ago.
What he means is Old Testament, real wrath of God type stuff.
Exactly.
Fire and brimstone coming down from the skies, rivers and seas boiling.
40 years of darkness, earthquakes, volcanoes, the dead rising from the grave.
Human sacrifice, dogs and cats living together, mass hysteria.
That's mass hysteria, right. So anyway, we had to go to Ghostbusters to really get a good description of what a lot of people are talking about today. But most of those people were all in one place, and that's Citigroup. Just about nobody picked up the ball on it, which made me think that, yes, we could see much lower. We're at 1878 on the S&P cash. I think we're headed back down to at least the lows, and I think we could do exactly what energy did until kind of last week, and that is just sit there and nickel and dime you lower every day, another couple bucks in crude, the same kind of thing in the S&P. I wish I could have had more to hang my hat on in the general indexes. I saw a lot more opportunity in sectors and individual stocks. Those stocks are starting to crack for me today for the path of least resistance. Yesterday, we went for a sector trade in technology. That was up last time I looked 7 or 8% today. So a first good day into those. And of course, a single day, 9%, thank you. A single day does not actually make a trade. My trades, I'm looking for somewhere kind of at a minimum of about 25%. And normally I want to see 40% on the other side. Doesn't mean I get it. Some trades don't work out. But normally I don't put money to work unless I have a good chance of that. And I think that there's, we're a fourth of the way there in the first day. But I think that there is something that has broken. Not exactly sure what. I think we really started seeing it to begin with in Amazon yesterday. And was there anything really typically different in Amazon? Not really. But what I saw was huge amounts of selling. And that kind of selling only comes in a few times in a trader's in a year. And that is when there is a liquidity event. We've gotten down to 501.80 on Amazon. And I said what it really had to happen yesterday is Amazon had to close back above about 545 because of the long-term confluence levels back there. Now, I think it's wiped out now. Maybe it's still there. There it is. We'd been talking about these confluence levels, and I thought, maybe the market would make it back up to some of these and I could short with abandon. The market was far weaker than that. It never made its way back up to the 1950, 1970 level, which I thought was a good, it had a good chance to do. But at least my belief kept me out of doing something stupid like shorting early. I took a breather. I didn't give a lot of cash back to the market. In fact, didn't give any cash back to the market really to speak of. And so I'm still got a fairly good and superior mental attitude to go at the market. But, when these big stocks like Amazon, Google, don't do what they're supposed to doing, you start seeing huge selling in it. It blows away levels that should be fairly decent support. You really start to have to wonder about what's going on in the broader market. Did something physically change with Amazon? Nah, their sales were off a little. Did something really change in LinkedIn? We'll get into that. Individual stocks kind of a little easier to pick things that did change. But for the most part, I didn't see anything in LinkedIn or Tableau data to really say that, I could have predicted that. I did see kind of a general malaise yesterday that made me think we were headed lower. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as always, I just wanted to get to some of the stuff because the market was moving before much happened. Of course, we're just making more new day lows in the S&P cash. So we won't have a lot to say about that, but let's get the regular party started out here in the market.
And it's all just a little bit of history repeating.
On this day in 1637, tulip mania hits its peak in the Netherlands, with the price of the rare Wit Kroon tulip reaching 1,345 guilders per half pound, up 2,500% in 33 days. Over the next 5 years, these bulbs lose an annual average of 76% of their value until they fetch only 37.5 guilders in 1641. This is the first really well-recorded, how can you say it, well-recorded venture into silliness in markets. And if you go back and dig it in, what had happened was that these tulips, in a kind of a black and white world, when there wasn't paint, red, you couldn't paint your house anything other than white or black. These tulips developed a kind of a rare fungus on them. And the fungus made these things incredibly brilliant and colorful, and in a rather black and white and creepy existence where you may, if you were lucky, live to 40. It was incredibly vivid. And apparently this was something that, you didn't see a lot. And a lot of people really got into this thing. Now, kind of toward the end of it, this fungus started going away for some reason. There were some other reasons this went on, but of course, it became the Beanie Baby of 1637. Didn't know they had them in those years. But it is one of the best recorded, or first best recorded, ventures into financial dementia. If you've never read it, I recommend from time to time, especially now that we're in a bear market, that you start reading some of the books that surround this. Probably the best one, it's only like 110 or 120 pages, but it is absolutely brilliant. It's a book called, what is it? John Kenneth Galbraith. And it's not Reminiscence. Man, I put notes up all the time on this thing. I don't know why. I can't figure it out. Where's my documents? Market books and quotes, book notes, stage. Where's it at here? Randomness, options, expiration, gold, easy language, books. It's going to drive me nuts. I won't be able to continue the show until I get it back. Oh, a short history of financial euphoria. But what an excellent book. In fact, I'll bring my notes up here on this right now. I try to reread this one every 6 months just because it is such a good blueprint of what's happening over the years in the market. But he was John Kenneth Galbraith, I think, was a biographer for Kennedy, or the Kennedy family, some other stuff. Real leftist, as any economist truly is. They don't want to have to actually make money in the real world. That would be too tough. But after the dot-com blow-up of 2000, I got into several books. This was one of them. I got into a lot of books about long-term capital management, too. Those are all great for figuring out how people start bubbles and why they blow up. Anyway, there was a quote in it, and all the books I read, at least market books, I kind of make a white paper, at least for myself, in it. But there's always this little part of every book that I think that is worthful, is that actually gets down to the nuts and bolts of the issue. But this is a quote from that book. The euphoric episode is protected and sustained by the will of those who are involved in order to justify the circumstances that are making them rich. And it is equally protected by the will to ignore, exercise, or condemn those who express doubts. And that's pretty much why we have bubbles. Everybody's getting rich. Nobody wants to hear it. And that is it. And all the speculative episodes all have a similar formula. And you can dig it out. He goes through almost all the best bubbles, the South Sea bubble and the rest of them. The inventors are declared geniuses. And one of his major rules are that the rule is that financial operations do not lend themselves to innovation. And every time you find some Fed governor who thinks that he can jimmy the system, it's never worked in the past, never worked in 6,000 years of recorded history. But of course, they're all smarter than the market. After the initial run, additional leverage is encouraged and provided. QE 3, 4, 5, 6, 7, 8, 9, 10, lower interest rates, Anyone that says the bubble is ready to burst is attacked or ridiculed. The bubble bursts. The public never blames itself for its greed. The geniuses are prosecuted, exiled, or killed. A recession or depression occurs that lasts many years. Politicians pass new worthless law, Dodd-Frank. A new generation comes along and it occurs all over again. And he covers many of them. Tulip Mania, John Law, who literally sold all the land in France on a bubble scheme, the railroads, various fiat money schemes, do you want to buy some swampland in Florida in 1925, the stock market bust in 1929, overseas services in 1960, junk bonds of the 80s, the 1987 crash, the 1990s saving and loan debacle, the dot-com craze, and U.S. housing. And actually, I had put this on this list. I'd written this document in 2001, and I'd already put U.S. housing on the end of this. In fact, here's my note. I think we can actually add the dot-com bubble already on this list. I think this is mid-2000s. And I had already had put U.S. housing on this thing in mid-2000. So well worth a great read out there, but keep on it. And like I said, a lot of good quotes in there. The circumstances that induce the recurrence lapses into financial dementia have not changed in any true operative fashion since Tupelo mania of 1936. And what else can you say about it? Good stuff, good reading. And we will continue on. Other things of interest, you can give me a call at 877-927-6648. Venezuela's going down the tubes. The president down there and his socialist agenda is eventually you run out of everybody's money, including Venezuela. He's now telling everybody that the largest privately held company that delivers food is a thief and a traitor. Of course, it couldn't be any of his retarded policies or the people before him. But again, socialism, once again, every time it's tried, it has failed, and miserably. And of course, now we have people saying that they can get us to the level of Greece in no time at all. Or maybe just Detroit. Either one would be fine, right? Anyway, blaming everybody but himself. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I'll have to see my broker, find out what he can do, 'cause I'm in the market for you. There won't be any joker with margin, I'm all through. 'Cause I want you outright, it's true. You're going up, up, up in my estimation. I want 1,000 shares of your caresses too. We'll count the hugs and kisses when dividends are due. 'Cause I'm in the market for you.
Oh, how could it be? I'm in the market for you. Ah. Anyway, bear markets. I think it was Andy had a guest on. I can't remember now. It's one of the guys that he works with. My memory is the shortest thing I got. Second shortest thing I got. The bear markets out here. And the question I had, he was talking about how long bull markets ran. Never really discussed it. There was some people out earlier this week, and I think this was, I'm trying to remember the company that did it. Anyway, I can't remember now. If I don't write it down right then, I forget. But there was another thing that I was talking about earlier this week about how many companies that had actually reported more than their estimates on the last day of the year compared to that. They moved them all down while no one was looking between the end of the year and the first of the year. And oh, surprise, everybody beat. Well, they didn't really beat. They just moved everything down. And of course, now everybody knows. But it was very interesting. Anyway, these bear markets I've looked through, I've seen about 4 or 5 different surveys now. And just so you know, a lot of people talk about how long bull markets last, but finally got some decent data on how long bear markets last. The average length is 362 days. So I never got whether these are trading days or actual regular days, but I'm assuming that they didn't go down and count how many vacation days were out there. So I'm assuming these are regular days. When there was no recession, 192 days. With a recession, 508 days. So you can really start looking at how bear markets come along. There are a lot of charts that show bear markets show up even in decent economic times. But what you can say is bad news for the economy is very bad news for bear markets. But just give an idea that, we've had a very long bull market. Would it be surprising to see something with a bear market that would last 500 days or longer? I suspect that we have at least into the election for the for this bear market would even have a chance of resolving itself. Had some questions about whether or not there's some stocks I like, and I think people are confusing stocks with companies I like. And that is, if you get a LinkedIn, you're going to have 6 months or maybe a year of that thing bouncing around at lows before it's probably any kind of decent long-term buy. So I'm not waiting for the first low to go diving into LinkedIn or Tableau Data or any of the other ones that have been creamed overnight. But these bear markets, you got to say that probably as a start, this thing really started at the first of the year. So it would not be a problem to see these things last into the elections. One of the other things I saw, and I've got a chart for it that I thought was very interesting today, was they went through about 15 years of earnings. And this was the California State University, and figured out how bad stocks got hit. And if you knew that things were bad and you, as a CEO, came out early and said, okay, things are not going to be so good, your stock fared a lot better over time than the people that just said, surprise, and that was over. In fact, there's a nice little chart here from CNBC that I saw, but pretty massive change. In fact, if you had, and we're going to have bad earnings, if you came out before it, you have basically about a 3%, and this is on thousands and thousands of stocks. You're going to be supported much better. And I really was thinking about this when we were looking at data and Tableau software and LinkedIn. last night and watching these stocks absolutely get eviscerated. And it's just kind of hard to actually see it. Tableau software off by 48% today. LinkedIn off by 45%. Lionsgate Entertainment off 35%. Somebody asked me if that was going to squeeze. Lionsgate, we'll look at a chart at it, but it had maybe the lowest short interest of any stock in the market. And this goes back to my theory where you don't want a lot of people shorting these stocks because they'll be the first ones to start buying on the way down. All these stocks had very light short interest because they had kind of been hit before and scaring a lot of people. Splunk off of about 24%. It's a data mining company. Outerwall, the Redbox company, off 18%. Hanes Brands off 15%. Aetna Health CEO was out today on CNBC, said some very interesting things, none of which they put on their website, so I can't send it to you. I do have it recorded. I'm going to chop it up and play some of these segments that were quite interesting from his interview on Monday, down 11%. Tesla off 8.5%. Stericycle off 4%. So pretty much a bloodbath. On the positive side, Tyson Foods up 10%, Post Holdings up 10%, and Ubiquity Networks up 9%. I've always loved the company, but not talking about the stock. So always, when I talk fundamentally about products, make sure that you understand the difference between that and technically in those stocks. But back to my point here, it pays to be early. There's some significant data out there. If you just Google it, you'll be able to find it. But this would tell you, a CEO, not to wait until the earnings date to come out with the bad news. Very, very significant data saying that your stock's going to get hit a ton worse by waiting until earnings date to drop the chalupa. Anything else out here? No, it's a mad market. So let's start looking at stuff out here. We already looked at Amazon. If there's anything else out here, let's look at the Ubiquity. So I'm not a Debbie Downer all day today. UBNT, this one that did rally. They make and are a maker of one of the products that I have several of and I love, and that is kind of wireless routers for companies. You know, if you go into a big business, they sell a great deal of them. They look like smoke detectors sometimes now. They're trying to disguise them. But very good job on this. Thing was up to $35 today. Still up very well at $30.73. But as we said yesterday, man, you got to take the money and run when you get it these days. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And, oh, well, what can you say? Maybe it's just my upbringing as a son of somebody that fought socialism and communism forever that I can't see it. But I don't think so. Anyway, what else can you say out here? Ubiquity Networks out here pretty tough. Post Holdings also up. If I can actually type it, POST. Nice pop in this. Some of these stocks are up. Now, this one held a little bit more than most out here, and you kind of have to take a look at it. Zap. Why do I have to always get to that? Anyway, Post Holdings manufactures, markets, and sells private label, ready-to-eat cereal and primary products. And again, as we've talked last week, this is a sector that I don't like shorting. Somebody called in and wanted to short Procter & Gamble, I think, P&G. And I said, yeah, I'm not a big fan of shorting these. This is what everybody runs to. And I didn't think the earnings were that great, but that's it. I was going to look at Procter & Gamble out here. Now, this had some decent earnings. I think that's what that gap was last week or the week before last in Procter & Gamble. But these continue to be the place where everybody wants to go hide. And again, any of these food stocks seem to be pretty strong. If you only will go long a stock, this is kind of where you want to be looking. Tyson Foods blow off to the upside out here. It's given quite a bit of the back. Got to $58.95 today. Much lower out here today. What is it? 57.05 pretty much now. Is that right? Tyson Food? 56.87 is the last tick out here. But had some decent volume. All these stocks, in a bear market, it is problematic at best. I would look for this thing to come back into the trading range. But as more and more people sell their stocks, look for more and more people getting into the foods services, the Procter & Gamble's, all the other stocks of stuff that you have to buy no matter what. You might buy a little less, but if you're parking money, it is big. We talked about Outer Wall. This is one of my stories of the fish story that got away. I missed this thing back up here at $80. I wouldn't hold it through earnings. I was a little unsure about it. I thought it was going down. And of course, it's never given me a chance to get back in. Another down day on heavy volume. These are the guys that have the kiosks for counting your coins for Coinstar. And of course, it used to be known as Redbox. And of course, they delve into DVDs. There may be a good fundamental reason for buying this stock, and it may be the DVDs that are the ultra high definition coming out over the next year, because there is going to be a real problem getting that kind of high definition data, actually, these TV sets. But I don't smell a low anywhere close to this in the near future. You can give me a call at 877-927-6648. You can post an email to me at path@tfnn.com, and you can post a message in the den. Okay. Thanks, Sandy. I had already looked it up, but she was saying it was John Kenneth Galbraith. Also wrote The Crash of 1929. I just like the kind of overall view when I recommend the book of that all the bubbles that blew up. And she said crash twice. I have a few others out here. Regular listener to your show. We talked about this earlier. Data LinkedIn. Do you ever see where you would be a buyer? You're going to have such a long time before these things bottom out after the destruction these stocks have had. I'm not going to be out here bottom fishing for these things anytime in the next 6 months. So after about 6 months, let's take a look and see whether or not Data and LinkedIn have found some kind of low. Amazon, I've been short for 3 weeks. I don't know. He's looking for a gap fill at 300 or a gap fill at 500. I don't understand that email at all. But you can give me an email, path@tfnn.com, and put something in the den here if you want me to look at anything before the end of the day. We just have a few moments left in this show. Let's go back and check and see what kind of volume we do have in the S&P as we move along. Got to a low of 1875. We're at 1879 now in the cash. 3.3 billion shares. So volume pretty good for Friday. Could we bounce a little on Monday? I think we can, but I think the die is cast out here. Nobody's wanting to be a hero going into the weekend. The earnings have decidedly turned down for the most part, and I don't see anything that really changes this. Probably going to continue to see liquidation in stocks people can actually sell, and not the stocks that are already down. We've talked about this before, and that is in a bear market, a lot of people think, well, you know, Amazon, they're going to continue to sell stuff. Maybe it'll be a little lower. It's not going to be $200 lower, is it? Well, it gets to the point where you literally can't sell a stock at all. Going in, especially if you're big and you've got 100,000 shares, you can half the price of a company in 5 minutes just floating the 100,000 shares. So what do you have to do? You got margin calls coming. You sell Amazon. You sell Tesla. You sell anything out there. Oh, we didn't look at Tesla out here today. A lot of, I guess it was yesterday, discussion in the den, the show about Tesla. I'm about as bearish as you can get on a company. We've talked about this forever for all the reasons Tesla is going lower, and much lower today out there. Volume did pick up a great deal, 157.74 out here. And of course, energy to the downside has just blown away everything. I don't know where this thing is going to find a bottom. We're going to go to Mike in Toronto. How you doing, Mike?
Yeah, hi. Thanks for taking my call. I want to look at the energy stocks, the CPG, that's the Crescent Point Energy on New York, the XLE.
Let's look at one at a time here. Yeah. I'm slow.
And the third one is UGA, gasoline.
Well, we'll just look at Crescent here to begin with, and then remind me of the others. I've already forgotten about them. Okay, Crescent Point Energy, CPG. What are you thinking about on this?
Well, it's behaving very well today. I mean, somebody bought the open, and we're hovering near the highs.
And you're right at confluence.
Okay.
So my trading plan would, if I would have bought it at the low at 872 on January 20th, would have been to sell it right here. Energy is a little better off this low. You did have a test of the August 24th low on lighter volume, so you've got to like that. But after this is no different than my discussion of buying any of the other stocks we talked about, like Data or Tesla or the rest of them. After you've gotten such massive destruction, it is exceedingly rare that the markets just turn around and take off. They have to consolidate for a long time, much like gold did. How long has gold been going sideways? 9 months? I don't buy the instant V theory that everybody's floating out here in energy or in the rest. It takes a while to make a bottom. Gold is a good example. We'll come back with this gentleman after the break.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back with Mike in Toronto, where I spent a great deal of time in the 90s. Flew up there every 2 weeks for, 10, 12 years, whatever. Out in Markham, Ontario. How you doing, Mike? Still there?
Could you look at UGA? UGA?
I'm pulling it up here.
Yeah, that's gasoline. That's the gasoline ETF.
Yeah.
It's into the high of the low bar, the monthly bar from 2008.
Mm-hmm.
Okay? The question is, are we going to hold here, or do we go and retest the 2008 lows at 16?
My guess is we go test the lows.
Really?
Yeah.
So you think wholesale gasoline is going to collapse? Huh?
Yeah. I think so. I think we've got one more leg down in all of these energy sectors. And the reason why is the collapse of probably some European banks. So I think unless the economic news desperately changes, or I see a change in the Baltic Dry Index, let me pull that up real quick. How do I do that? Move to new window. There we go. Here's the Baltic Dry Index. A good example of looking at this. I don't see where any signal comes in that there's been a low made in the industrial sector that means that we're going to be burning lots more fuel. Can it, we had a bounce from 33 to 43 and it came back down. I think we're just kind of in that same thing. I want to see a sea change in the price of the Baltic Dry Index. It's down $5 again today. In fact, I was talking to Andy Heck about this yesterday, and I was kidding him. I said, forget Amazon. You want 100,000 tons of iron ore? Shipping's free. Of course, for those people that don't know what the Baltic Dry Index is, it's anything that you don't like throw in a bag somewhere and then ship. It's stuff that, you literally see wheat and grain and iron ore just fill up an entire ship and they send it somewhere. That's what this index is all about. And to me,
so you wouldn't touch UGA until it does a double bottom at the 2008 lows.
I want to see a low in this Baltic Dry Index that tells me that anything is made a low. To me, that's the first spot where we're going to see that there's been some kind of low. The ships come off, that they can actually start charging more for shipping. Until they do that, I don't see anything out there that tells me a low has been made in any market. Okay. So I'm going to be a seller, as I said this week. I'm a seller of all bounces until we find some kind of signal out here. I think it's going to be in the Baltic Dry Index, though, that says that there is a low in industrial consumption. And I just see this thing going lower every single day, down another $5 today, down 1.65. It just hasn't moved. It just goes down and down and down. And normally, I think we're going to see that crude is going to follow that same path.
Okay, thank you.
You bet. Thanks for the call. We're just about out of time. I will be in the 3:40 segment of the next hour with Tom O'Brien. And I think at 3:30, we're going to have Steve Rhodes right before me. He's going to be talking about his new webinar, so make sure and listen to that if you don't listen to Steve regularly. And other than that, like I said, I am a turducken of bearishness. I'm a polar bear that ate a Kodiak, that ate a grizzly, that ate a brown bear. We'll see you Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.